Oh, hello everybody. My name is Goncalo. I'm a co-founder and CEO of SyndicateRoom. Just so I can have a quick idea about the audience, would you mind just putting your hands up if you ever heard about crowdfunding before? All right, that's good. That's clearly going up. Equity crowdfunding? Great, you're going to make my life a lot easier this afternoon. So, first of all, very quickly, because most of the room already knows, what is crowdfunding? Crowdfunding is all about having usually a large group of people, the crowd, investing what typically are small amounts into idea or projects or companies. Now, does anyone know what the first crowdfunding project ever was? Any ideas? 2005? 2000? Anyone saying that, putting their hands up for the 90s? 1885. That is going to be the first ever crowdfunding project. And guess what? Here it is. Now, in 1885, or just before that, the Statue of Liberty was sent by the French to the US. However, it was sent to New York City in specific. However, New York City had a problem. They didn't know they didn't have a place to put it. They didn't have any money where to build a pedestal to put the Statue of Liberty on. Other cities like Chicago, like Detroit, they all jumped on that grenade and said, hey, we'll pay for it, we'll just put it over here. There's one man that put an article in a newspaper and a little advert asking for donations for $1 per person to build a pedestal of the Statue of Liberty. And guess what? People in New York all came together. 160,000 people gave $1 each, posted it, and they got $160,000, which back then obviously was a huge amount of money, and they built the pedestal based on a crowdfunding campaign. And that's why the Statue of Liberty is where it is today. Now, of course, the internet back then was pretty damn slow. So crowdfunding has come a long way since then. And this actually covered quite a few different things. So, for example, President Obama, he did a crowdfunding campaign to fund his running for the elections. And many say that actually that was the difference between him winning or not winning. Because in case you don't remember, it was a pretty close call in many parts of the US. And guess what? If you contributed, even if it's just $10 to his campaign, guess who you are more likely to vote for? Right? Really, really, really clever. He got the money, and he pretty much got your vote guaranteed. Other examples. Does anyone recognize this? Pebble Watch. Very, very cool idea. This is a watch that, now there are several others copying it, but back then was absolute novelty. Bluetooth links to your phone, and you can read your text messages or your Facebook updates and so on your wristwatch without actually having to take your phone out. They had an ambitious goal. They went to Kickstarter to raise $100,000 US. And they said, look, this is what we want to build. Is a watch, Bluetooth, links to your phone, wonderful. 3 hours later, they broke through the barrier of $100,000. 10 days later, they had to stop the campaign. They had sort of pre-sold $10 million US worth of a watch that A, they didn't have to sell, B, they didn't even know how to build it, right? And they had $10 million US worth of orders for it. This is a hugely successful campaign. They had to move production to China. They had to bring people in that actually knew what they were doing. But the whole vision was amazing, and the support from people giving $100 on average was just amazing. They delivered a watch 18 months late, but they did deliver it. They have a second version, and it's a pretty cool product. Now, in that case, people gave $100 and they expected a watch that they wanted. They didn't know when it would be coming. They just hoped for it. They really pre-bought the watch. This one is a lot more interesting. This one is Oculus Rift. I'm not sure how many people recognize this. This is very cool. It's basically goggles that you put in front of you, and you have two screens, so you can see everything 3D, and you can see wherever you are. So if you imagine you're playing a computer game, you put that, it's really funny because you get to see people sitting at the chair, putting that on, and then because they are in the computer game and because it has accelerometers, it shows wherever they're looking at. So if they turn their head to the right, it will show the image, whatever it's on the right. So for example, there's some computer games where you're being chased by a tiger. So you have these guys sitting in an office, in a chair, looking back suddenly, really scared about something behind them. They went on Kickstarter as well, and they had a slightly more ambitious target of $250,000. They very, very quickly raised $2.5 million. They stopped there. Now, why is this really interesting? It's because a venture capitalist came straight after, met them and said, you clearly have the demand for the product. Again, a product that didn't exist. You have $2.5 million US in a bank. I'll invest $2.5 million. So you had these people that had given $25 and they got a T-shirt saying Oculus Rift. And then you had the VC investing in and getting shares in a business. This business was later, 18 months later actually, bought out by Facebook for $2.5 billion. Right? So this T-shirt that you got for $25, had you invested, just like the VC did, had you got shares instead of the T-shirt, you'd have got $40,000 US back. It has got to be the most expensive T-shirt in the whole world. But here's the difference. People gave money. They didn't invest. They didn't get shares. So they didn't get a share of the profit of the company. And that's what takes me to equity crowdfunding. Equity crowdfunding is in many ways similar to crowdfunding, to pure crowdfunding, with the difference that you get equity. You get shares in a business. Typically, but not always, unlisted businesses. So businesses that have high expectations of very high growth and then eventually get listed or get bought out by another company, just like Oculus Rift was bought out by Facebook for £2.5 billion. And that's exactly what SyndicateRoom does. SyndicateRoom is the only investor-led equity crowdfunding platform that enables people to invest alongside the professionals. Now, our uniqueness is that you, as an online investor, can invest alongside very high net worth, very sophisticated, very experienced investors that are the lead investors, and then they offer the opportunity for you to invest alongside them in the very same deal, so in the very same company that they are investing huge amounts of their own money in. And the vision behind SyndicateRoom is that on a pound per pound invested, it doesn't really matter if you invest £1,000. It doesn't really matter if the very, the very large investor invests £1 million or more. Everybody will make or lose the same amount of money on a pound per pound invested. So why did we start SyndicateRoom? We started SyndicateRoom when I was studying. I was doing an MBA in Cambridge, and I was working a lot with business angels and early stage VCs, and I could see a lot of these incredible companies, really inspiring entrepreneurs that they were investing their own money in. And I started asking the question, but can I invest? I said, yeah, sure, of course you can invest. How much do you want to invest? I don't know, maybe $1,000. And they just laughed. Oh, look, sorry, yeah, this is not quite for you. I said, but why not? Why can't I invest? I appreciate you investing $500,000, but why can't I invest £1,000? And I became that very annoying kid who like, why not? And the true reason was that it's just not efficient. By the time you sign a check for £1,000, send it to the lawyer sends you a bill for £1,000, thank you very much, and that I will cover. And your investment went to pay for the lawyer. Sorry for any lawyers in the room. But the fact is, it's just the old way is just not efficient enough. It's just not feasible. At the same time, I could see crowdfunding, equity crowdfunding appearing. Now, I could see the crowd looking at startups and investing in startups. And I really like the idea of a wider audience having access to these high-growth companies at a much earlier stage, usually than IPOs and listed companies, but not always, a lot of them pre-IPO. But there was something else I could see. I could see that the crowd was not investing in the same exciting companies, in the same high-growth companies that I could see the business angels investing in. And that's the big difference with us. We are the only UK-based investor-led platform that allows the crowd and the professionals to invest in the very same deal, whereas equity crowdfunding typically is company-led, which means that the company goes to a platform, says, I think I'm worth this much, and people invest online. And that's why we created SyndicateRoom. Created SyndicateRoom because we knew that what the crowd really wanted to invest were in the same companies that the professionals are investing in. You know, why would you invest in companies that the professionals don't want to invest in? You know, that's rather worrying, to be honest. And that's exactly what SyndicateRoom does. What SyndicateRoom does is to allow you to invest alongside the professionals. Completely fair game. So you get the same class of shares, you get the same price per share, and you share the risk and the reward. You know, back to our vision is that on a pound per pound invested, you make or lose the same amount of money. Lead investors include people, well-known angel investors and very successful entrepreneurs like Jonathan Milner, like Herman Hauser. Jonathan Milner was the founder of Abcam, which is listed on AIM. Some of you may know about it. Herman Hauser was the founder of Arm, an incredibly large company and an incredible British success as well. And what we've allowed is we've opened this, what used to be a very exclusive world of these investments. They're always really private and really confidential. And now what we've done, we've created an online investment platform that allows you to look at the deal, to see who the lead investor is and think, right, do I think that Herman Hauser is the right person to be the lead investor? Do I like what the company is doing? Do I want to invest or not? And then you make your own investment decision. So they're not recommending you. They're certainly not giving you any investment advice. What they're saying is, look, I don't really care if you invest or not. I'm investing a huge amount of my money. What you do with your money is up to you, but you can join in a very same deal. Now, crowdfunding typically works very, very well with consumer products like this one. I actually have an example here. This is a plug that's absolutely flat, and it's me being European, I love this thing because what it allows me is these chunky British plugs to be folded away and have it in my pocket. So this is great to charge mobiles, laptops, etc. You know, every time you go to a coffee shop, you can just unfold it, fold it away. There you go, flat in your pocket or in your bag, really easy. This is this type of project that does very, very well in crowdfunding. However, because of our model, we attract two very different types of customers. One are far more sophisticated companies, companies that have real intellectual property behind them, very much along the lines of the companies that typically get listed. And on the other side, much more sophisticated investors, because they need to understand these propositions and they need to understand what the lead investor is there to do. So some of the sectors we have been very successful in funding are healthcare. So these are three examples of quite a few that we've done in healthcare. And the beauty about these companies is that they make the world a much better place. And you can invest small amounts of money, a much lower threshold, into these companies that used to be completely exclusive deals. And these include, for example, down there on the right, that's LightPoint. There is a live detection of cancer while a patient is going through surgery. And they've raised a huge amount from us. Here, Oval is for people such as with diabetes and other diseases where they need to carry a needle with them all the time for emergencies in their bag. That's a very easy needle to use, even if someone that doesn't have any experience in giving an injection needs to use it for some sort of emergency. The top one is one that helps women understand their fertility cycle and to help them getting pregnant faster. So all of these are companies that really make the world a better place. We're also very strong with engineering. The top one, Aristech, is a very, very cool device that you can add to a petrol engine, and it saves a lot of the fuel consumption and reduces a lot of the emissions. Do you know how long it took them to close their funding round? 5 hours. This is a company that used to, these type of companies used to take months going from private investor to private investor to private investor to start adding them up to the amount that they wanted. 5 hours. They went live at 9 a.m. and they closed within 5 hours. Down there, power storage, very, very, very important. This one here, okay, I admit it, it doesn't make the world a better place. It's a one-seater airplane. It's a rich man's toy, but it makes the world a much better, much more fun world to live in. And this is the type of sectors that we allow our members to invest in. a lot of healthcare, a lot of engineering, as I said, but also a lot of hardware, software. You know, the vast majority are very IP-based companies. Companies that have something that protects them from competitors and have an unfair advantage over their competitors, because that's what the professionals like to invest in, and that's what they invest huge amounts of their own money in. Now, getting to IPOs, and how can we help getting the public back into IPOs? IPOs, recently, they've been, or until about 3 years ago, they were very much getting more and more into institutional investors and not really allowing retail investors from the beginning. They would allow it as soon as it would get listed, but not before. And this is what we are here to change. We've shown that our model works. We have shown that it can work for IPOs, as I will show in a little bit. And now what we're going to do, and we've already started doing, is to allow the public, allow investors like you and me, to go online and invest, but not invest when the professionals want to get out. You invest when the professionals want to get in. At IPO stage, you can buy shares at IPO stage, and then you are free to trade them whenever you want, just like any other listed company. Now, here's the special thing. We have done the first and only crowdfunded IPO in the entire world. That was back in December. And what we allowed, and that's the beauty of it, is to allow retail investors to come in exactly at the same time under the same economic terms as the institutional investors. Institutional investors, in this case, was the Mill Residential REIT. Institutional investors, this was a very small IPO for IPO standards. It was a £3.5 million IPO on AIM. Here's the interesting part. Institutional investors brought in £1 million. While the guys behind Mill REIT were going around doing the roadshow to institutional investors, and they got £1 million committed, we opened it on our website online for retail investors to come in. We raised £2.3 million in the same period that they raised £1 million from institutional investors. Again, all completely fair. So everyone gets the same class of shares and the same price per share, but far more efficient online, and also opening it to a new, to retail investors, to online investors, to normal people that want to invest into these companies. We've done AIM history, which I'm really proud of, and we are going to do it again. We will be doing this again. Now, why do companies do it? Why would a company go and put us effectively raising finance from retail investors side by side with institutional investors? The first one was speed, right? I told you that they raised about $1 million. We raised 2.3 million at the same time. The second one is actually liquidity. Very, very healthy liquidity coming from a huge range of smaller investors that will trade the shares, will buy and sell without having too much impact on the price of the share. So if an institutional investor has a huge percentage of the shares that are available, and suddenly they decided to sell them all, the price of the share can fluctuate very significantly. But smaller investors buying and trading, actually, it sets the price really nicely and gives it a really healthy liquidity to stocks that are incredibly important, particularly on smaller ones and particularly on AIM. Now, the second one the second reason is this one, coverage, particularly for companies that have a consumer focus. These are just some of the titles where the Mill Residential REIT appeared in, most of them just in entire 1 or 2 page articles within the same week. The coverage was absolutely amazing. We got really incredible journalists, incredible publications write about this and digging deeper, and the exposure that the Mill Residential got off the back of it is, it's something that not all companies, but a lot of companies would pay absolute fortunes for a PR agent to get. We got it in the space of a week. So again, this coverage is very, very important. Now the really important thing, which is, what is it in for investors? Well, I looked at the report by PwC, a really interesting report by PwC. And this is the analysis of the last 44 IPOs in London. And look at that. 39 went on to increase in value. only 5 went on to decrease in value. Now, if you think that the public is out of the IPO when companies actually list, this is what the public has been missing out, and this is where the institutional investors get all the time. They get to go in at the IPO stage, they get to exit whenever they want later, but the public, in the vast majority of these ones, actually were only able to come in after the IPO, so as soon as the shares get start to be traded. And to me, this is fundamentally unfair. Why should you be at a disadvantage when you have a small amount of money to invest in a large institutional investor? It's back to our whole vision. So when we started with unlisted companies and business angels having serious amounts of money to invest. Why should they have access to much better deals? Why shouldn't we, if you only want to invest £1,000, why shouldn't you have access to those? This is exactly the same thing. Is why should institutional investors be the only ones with access to these IPOs? And the really interesting part is that companies are picking up on that, and the vision of it all is changing so quickly you have no idea. But really importantly is for investors, for retail investors, to be able to come in at IPO stage. But there's a big benefit of having professional investors involved as well, because they set the pricing. They are very well informed investors, and they set the pricing within the typical range. And this is, again, absolutely aligned with our vision, which is everybody gets access to the same price. And that means that you get access to the same price as the institutions are paying for the shares. Again, really important to make it all incredibly fair and making sure that on a pound per pound invested, everybody makes or loses the same amount of money. This is where we are now. So we've done the first crowdfunded IPO. We're going to do quite a few in the next few months, hopefully. So if you want to find out about them, sign up. It's free for investors to sign up. No one has to commit to anything. And then when they present it, you will definitely get an email about it. But this is where we are at the moment, and something as the CEO, I'm really, really proud of, particularly of some of these stats. So this one is the one I'm the most proud of. Every single company we funded so far, and bear in mind this is early stage, so much higher risk than IPOs and certainly listed companies, every single one of them is still trading, right? That is, as part of the nature of this type of investment, I have no doubts that unfortunately there will be companies that won't be quite as successful as they were hoping for. It's just the nature of early stage finance. But so far so good. Every single one of them is still trading. We have funded, I've done these slides, so I had to. When did you
establish?
Great question. Sorry, yes. So we haven't actually even turned 2. We're going to turn 2 next week. So we've had
So that's not really a good representation, is it? Because 2 years.
Well, if you consider that,
Next year.
if you consider these are early stage companies that statistics show that half of them go bust in the first year, is a very, very good stat. Right, not a single one of them. These are very early stage, higher risk. So these are not listed companies, apart from Mill.
But they might have been trading for some time as a smaller family business or something like that.
No, typically these are high growth companies with IP, so they don't tend to be companies that have been around forever and then they get an injection of cash. They tend to be companies that, by the time they raise finance with us, on average, they are about 1 to 2 years old. So they are companies with the expectation of high growth. But of course, if you have that expectation of high growth, there's a high risk of failure. And then there's, of course, a higher likelihood, hopefully, of becoming successful. Now, trust me, 100% still trading is compared to our competitors have a lot lower percentage than that. But that's fine. It's normal in this type of early stage investment. So but 100% is phenomenal. As I said, we did the first and only crowdfunded IPO. And these slides are out of date by the time I finish them. I sent them to here to present. They're already out of date by 2 companies. They're already out of date by 2 million. And I sent these just a few hours ago, just last night. So that is all from me. I would love to take questions. I will be outside as well to answer any questions that you may have. But I'm really looking forward to get IPOs and companies inviting the retail investor to come in at the IPO rather than just at after they listed, and to share that between institutional investors and retail investors. Thank you very much. So any questions? I still have 4 minutes, so.
I just wanted to know what your charges were, how you make any money from it.
Thank you. We're not a charity. Thank you for highlighting that. It's completely free for investors. So the company pays a fee for using our services. Investors don't pay anything. So it's free to register. It's free to invest. If you invest, whatever amount you invest, 100% is invested into the company. You get the respective number of shares out of that 100% of whatever you invested. The company pays a fee for using our services. Any more questions? Yes.
Can you remain in an ISA wrapper or a SIP wrapper?
I didn't cover that. We did also the first ever in the world crowdfunded ISA wrapper. The problem with the crowdfunded with the ISA is that most of our companies are EIS, which is the Enterprise Investment Scheme, which is a lot more. It's a lot better than the ISA, provided you pay income in the UK. So the ISA is great for some people, but actually the vast majority of people, the EIS can be as much as 60% back into your pocket in tax relief. So the EIS is better, but we have done ISA, but it's not too relevant. But yes, it can be done. Some of them will be. There was a question, yes?
I guess not every company can be listed on your platform. Do you have some sort of due diligence that you do to allow certain companies to be there and others not?
Yeah, definitely. Pretty stringent, actually. So I didn't cover that, but that is covered here. So 80% of the deals being successfully funded is incredibly high. Again, as part of the industry, that number is in the middle teens. It's 14, 15% on average. We have a very detailed due diligence from our part. So investors are still responsible for their own due diligence. We don't provide any advice. We are execution only. But of course, as a brand, we don't want to have businesses raising there where you as an investor look at it and think, what's that all about? That shouldn't really be there. So having 80%, so 80% of the businesses getting fully funded, it is incredibly high, and that's very good. But yes, we do have our own due diligence. It's the largest team in the company, to be honest. Any more questions? Yes, there was one at the back.
If you're investing alongside other
Mm-hmm.
investors, how much access do your investors through your website get to the due diligence that's done by the other investors?
You don't. You don't. The reason being, it's just about regulations. If you would get access to that due diligence, what would happen is the lead investor would potentially be liable for your own investment. So what they're telling you is they're not telling you, look, this is a really good deal. I've done the due diligence. You should invest, but I'm not putting my money in. They're not saying that. They're saying exactly the opposite, which aligns the interest amazingly, which is, actually, I don't really care if you invest or not. I'm investing $250,000 of my money, or $500,000, or whatever it might be, and you know that, but I'm not telling you if it's a good deal or not. What I'm telling you is that I'm investing my own money. If you invest or not, to be honest, I don't really care. It's your decision. From the lead investor's perspective, right? So they don't share their due diligence, but you know that they are investing huge amounts of money, and you get to know who they are. So if I go back to quite a few slides where I have the lead investors. So the companies that we had on the platform with these two lead investors that I use as an example, you know exactly who they are. You can see their background. So for example, Jonathan Milner was the lead investor for a company in healthcare. You look at his background, that's exactly how he made his money. That's exactly where he's been a very successful entrepreneur. He has taken two companies to be very successfully listed. So he's not telling you that is a really good investment. What he's telling you is, I'm putting my own money in, and then you can check his background, and you can make your own call whether he's a reliable person in that sector or not. Does he have expertise or not?
You're not exposed to a risk that your money goes in and the lead investor changes his mind.
No. Your money is, no. All the money either goes in or the whole thing collapses and all the money is returned. No, that would never happen.
So
Yes.
does every project have a lead investor first, and you can see how much he or she is putting in before you then make that decision?
Correct. So if you sign up and you look at our platform, you will see that every single project there has a tab saying lead investor. And very frequently, actually most of them, is more than one lead investor. And you can see who those investors are. When they have a LinkedIn profile, you have links to their LinkedIn profile. You can see who they connected to. You know, it should be part of your due diligence. But every single project, you can see who the lead investor is.
Is there ever any fund managers?
Sorry, could you repeat
Is
it?
there ever any fund managers that are involved?
We have had venture capitalists being lead investors. We've had family offices being lead investors, but not fund managers as individuals. They are lead investors as an institutional investor. Any more questions?
Last question, hopefully.
Yeah.
What's the time frame from something appearing on your platform to the deal being finalized?
It has been reducing hugely. It used to be, we used to give them up to 3 months. We now give them 4 weeks, and you know, a lot of them. So we have 2 deals, for example, closing tomorrow. They already fully funded. Now they're on what we call overfunding, which is allow extra investors up to a specific limit. But that deal is going to successfully close by midnight tomorrow. Those are companies that have taken sometimes days, sometimes just a couple of weeks. Some of them 5 hours. Our quickest one was 4 hours. Then the Raistech which was there was 5 hours. But typically 2 to 4 weeks, I would imagine, I would say.
Okay, lovely.
Great. Thank you very much, everyone.
Do you